Good afternoon. Welcome to this week's episode of We Got You Covered on RVN TV. We come to you every week talking all things insurance and employee benefits. And this week we have with us a friend for a very long time, 30 plus years I was looking at earlier, Ed O'Malley. And just to give you a little bit of background on Ed, he is a graduate from LaSalle University. He has his CLU and RHU designations from American College. 30 years plus experience in the insurance and employee benefits consulting arena. He was Senior Vice President for Commerce Insurance Services. He was Managing Consultant for Tryon Group, and currently he is the Practice Leader for Gallagher Benefits. And you have a tremendous community service as well, and I would like to go through these: United Way, Governor's Office on Volunteerism, Cerebral Palsy, Evesham Education Foundation, and the list just goes on. And we'll get into that in a little bit, but today we're going to talk about challenges employers and employees are facing relative to health care and other expenses that they have relative to insurance. I always like to throw out a statistic. One of the things that I found was the prescription drug industry is over $1 trillion industry today.
It is, Rob.
It's pretty big. Generic drugs have dropped 37% since 2014, where brand name drugs have actually increased over 60% in that same time frame. And Americans spend on average about $1,200 a year on their prescription drugs, about $100 a month.
Yeah.
Sounds about right?
It does, yeah.
So today we're going to focus on some of the challenges that our employers and employees are facing, because it's not just an employer who's offering benefits, it's also how the employees can navigate health care itself, their out-of-pocket expenses, how they can help finance and manage the monthly expenses. So why do you believe that health care costs are just so expensive today?
Well, there's a lot of reasons, Rob, that healthcare is so expensive and continues to grow much faster than the CPI. What we're seeing, we continue to see errors that add to the bottom line of the cost of health insurance today and providing benefits to employees. That's a major challenge. If you had a situation where you were an inpatient at a facility and you had to get a series of tests done and you were transferred to another hospital, they're not going to take those tests. They're going to require you to get the same CT, the same blood work all over again. So duplicative services is another major cost driver. The contracts that insurance companies provide to hospitals and physicians are another area that they've been working on, but without tremendous success. Under the Affordable Care Act, for example, ACOs were put in place where doctors could put contracts with hospitals and with insurance companies that would share the risk and give them some upsides. But there was also some ways to save money for the insurance carriers, and that was, for example, if somebody was a bounce back, they were in the hospital and had to go back in within 30 days, they would not be paid for that additional service, nor would the hospital. So there's a lot of moving parts. And as you said, you're talking about one of the largest cost drivers and the largest thing on an employer's balance sheet is providing employee benefits.
So I go and get a test, blood work, and I can take that to my doctor. And then the doctor says, you need to see a specialist.
Right.
So I go to the specialist and they're going to look at the same blood work. But why would, if I go to a hospital and I get an MRI, why isn't that good enough for another hospital to say, oh, you already had an MRI, let me look at the results?
I've actually spoken to hospitals. We insure a vast number of hospitals across the country, and I've had that conversation with physicians, and they tell me that it's a risk management issue. They don't want to have to wait to transmit it, which I think is nonsense today. With an EMR, you should be able to get everybody's records and be able to look at them in real time. But what they're saying basically is we don't trust that other institution, that they did what we would do in the same order and in the same magnitude.
And then it becomes, well, you got paid for that test, now I want to get paid for the test, so I'm going to give it to you just so I can make some money?
I don't think it's as crass as that, but in a fee-for-service world, which we've been in for many, many years, every single service that somebody provides is being billed for, and that is one. And considerable reason why we've seen trends year over year of 6 to 9% and even higher. We're actually on the downside of that today. Our actuaries provide us with a quarterly update on what prescription trend is and what medical trend is. And it has come down somewhat, but it's still too expensive for an employer. If you're working on very slim margins and you get a 5% raise year over year, that is not sustainable. It truly is not sustainable. So you have to do some things that are much more aggressive. One of the things that we see employers looking at more prevalently is self-funding their plans, where they're taking it out of the hands of the insurance company. They do engage them or a third-party administrator to process and adjudicate the claims, but they are handling the funds, and they're only paying claims as they come in rather than a flat premium that has margin in it for the insurance company and profit. It might have a middleman's add-on in it as well. So it really can be expensive. There's also state premium taxes that can be saved by self-funding a plan. And again, it's not going completely naked without insurance coverage. There is stop-loss coverage on an individual basis and an aggregate basis.
So what would be, let's talk a little bit about self-insurance and how it works. So the insurance company, they have their profit, they have claims, they have reserves, premium tax, all these things, and their actuaries say, well, your cost is $500 a month for single.
Right.
So in a self-insured environment, the employer basically becomes the insurance company.
Correct.
But they put in high levels of insurance protection called stop loss.
Right.
That can protect them against the high claimants and the high risks.
Exactly.
And then they go out and hire an administrator to manage their claims and things in that nature. So now they have skin in the game. Do you see, what's the average size group you would see? I remember when we were doing this years ago as associates, we were probably seeing employers down to 30, 40, 50 employees being self-insured.
Right.
And then it started to trend up, and then you didn't see it unless you were over 500 employees. Where do you see that trend today?
It's sort of in the middle. I've always been a conservative consultant, and I don't have any plans that are self-funded with less than 100 lives. Never have in my 30 plus years of guiding employers. But there are employers out there that will go down to 25 lives. And the reason why you want to be careful and very cautious in self-funding is because of the variables. You have to be able to absorb some months where the claims are very high and some where they're very low. And you really need to have claims that are consistent. And at the smaller side of things, it's just simply not credible. You will have wider swings where if you had over 100 employees or over 1,000 employees, it's almost actuarially determinable what those claims are going to look like.
So if the employer is risk adverse, probably not a good thing to
It is
think
not.
about it.
They should stay in the fully insured arena with the Blue Cross plans, the Uniteds, the Cignas of the world.
And how are those increases been over the last couple of years?
On the fully insured side, much higher than what they are on the self-funded side. There are some plans that we're doing right now where their compound annual growth rate has been 0 to 2%. And that's with aggressive plan designs. It is working with some concierge services that are becoming much more prevalent. Companies like Quantum, Accolade are out in the marketplace now where they're acting as a hub. And if you need an ID card, you call their number. If you want to set up an appointment, they will set up the appointment with your specialist, or with if you're a diabetic, for example, you should be seeing your endocrinologist. If you should call in, for example, and say, hey, I lost my ID card, can I get a new one? They're going to say, Rob, I notice on here that you haven't seen your endocrinologist for at least 3 years. Can I set that appointment up for you right now? And they're getting a much broader and a much deeper dive into helping people access care before it becomes acute. So they're taking care of people, and those companies we've seen significant success in.
Wow. So what about employers? So let's say my renewal comes back and it's 10%. And as an employer, I say, I just can't absorb that much. Either that or I have to cut back other expenses or lay employees off or so forth. What do they do on renewal? Do they just say, oh, I'm just going to go to your competitors and get a better rate or a better quote? Or how are they helping those costs go down as an employer?
One of the jobs is, that we perform as consultants and brokers are to negotiate on their behalf. So we're not just going to accept a renewal that came in like that. They have to justify that to our underwriters and our actuaries. We've been very successful in helping employers get the absolute best deal they can, and that may be by getting additional quotes from their competitors. We're going to go out for a smaller employer in our region here in the greater Philadelphia marketplace. There are really 4 carriers that you can go to that are on a fully insured basis, and they have 95% of the market space. So if you go to an Independence Blue Cross and they're coming in with a 10% increase, we're going to look at Cigna, we're going to look at United, we're going to look at Aetna as different options for them and compare those and make a recommendation to that employer on what's their best next step in that journey.
And we call those 4 big 4 the BUCA plans: Blues, United, Cigna, Aetna, right? And then there's other ones out there too, Oxford, but that's kind of a byproduct of United, I believe, right?
Yeah.
So that's just one part of it, the medical costs. What about prescription drug?
Yeah, one of the things that's happening, Rob, is the pipeline for drugs today. There are hundreds in the pipeline today, many of them cancer drugs that we believe are going to be effective in dealing with specific kinds of cancer. However, they are so expensive. Besides cancer drugs, there are drugs that we used to call orphan drugs that would be only for a specific illness or disease. And recently we just had the FDA approve, I'll give you 2 examples. One, spinal muscular atrophy is a disease that it is horrible, and it impacts on children, infants, and generally they don't live past 3 or 4 years. They came out with a genetic tool that basically removes that gene that is broken and can actually, as long as you get it to a child before the age of 2, that can take away this SMA. It costs $2 million to treat that. You can't put a price on a child's life, but how do you afford that? Another example is I have an employer that has 2 young brothers that unfortunately have hemophilia. The blood product for each of those brothers, and it will continue to grow, this year was over $1 million for the 2 of them. And they're healthy. This is keeping them healthy, and hemophilia is a bleeding disease, and this blood product keeps them, enables them to stay alive. If they were to bump their, skin their knee, they could actually bleed to death without this product. So it's something that has to be done.
So we have to go to a break.
Okay.
When we come back, we're going to continue to talk about challenges in the healthcare industry. We're going to talk about corporate citizenship and a few other things.
Sure.
We'll be right back with you on We Got You Covered, RVN TV, and I'm here with Ed O'Malley. See you in a few.
Add us on social media to watch bloopers, behind the scenes footage, previews, and more.
I work 13 hours a day, 6 days a week. So when I'm off the clock, I gotta get stuff done. So when I need a snack, I need something healthy, tasty, and easy to eat. Like wonderful pistachios without the shells. They're protein-powered, delicious, and great on the go. And that's perfect for me. Thanks, Liz. A woman without a lot of time.
Whether you're a gourmet cook or just want to eat like one, visit Rostelli Market Fresh, your home for the freshest, locally sourced ingredients to please everyone who loves great food. Our organic meats, quality seafood, and free-range poultry are cut fresh to order. Chefs create culinary-inspired prep foods made fresh every day, which pair nicely with our vast selection of fine wines and spirits. Choose from handmade pastas, artisan cheeses, organic produce, and grocery items, all from the finest purveyors. Rostelli Market Fresh, from our family to yours.
RVN TV is a platform for people of any industry to share their story. Over 285,000 viewers are tuning in to RVN TV shows monthly. We guarantee a great experience that you'll be sharing with everyone you know while increasing your personal and company's brand awareness. But what is your brand? According to Forbes, it's a combination of your logo, your product, your design and feel, and your personality. Did you know that aside from being a guest, we offer even more opportunity to boost your brand? Adding your company logo and website on screen during your interview will allow viewers to recognize your brand instantly. Incorporating images and video clips is another great way to showcase your product during your live segment. Let viewers see how good you really are. And most importantly, there's you and your interview. For less than the cost of a newspaper, direct mail, or a magazine ad, you can leave our studio and within 48 hours have a permanent digital copy of your live segment to link to your social media, embed into your company website, or use in email marketing. Investing in your brand is so very important, and we can't wait to have you as a guest.
Shelter dogs.
Welcome back to We Got You Covered on RVN TV. My name's Rob Shestack, and we're here with Ed O'Malley talking about healthcare. And one of the things before the break, we were talking about affordability in healthcare. And talking about affordability, there was a law passed in March of 2010 called the Affordable Care Act,
Right.
ACA, Obamacare. It's got a lot of different nomenclatures for it. But recently there have been several courts who have knocked down some of the parts and challenging some of the sections of the Affordable Care Act. What does that really mean for people today?
Well, it's actually pretty frightening, Rob. Just this week, the Fifth Circuit came out with a ruling about the individual mandate, which was part of the Affordable Care Act. And they basically are saying it's unconstitutional and sending it back to the appeals court. What will happen, unfortunately, is if that is sustained, and I think ultimately it's going to end up in the Supreme Court to make a final decision on this. But if they ultimately rule that the ACA, Obamacare, is not legal or not constitutional, I have a real fear for what will happen to coverage across the entire country. The Affordable Care Act put in a lot of really good things that people like today. And what we're seeing out there, the current administration, the Trump administration, has allowed for insurers to offer stripped-down plans and plans that don't have preventive benefits, for example, and some of the mandated things that people genuinely like and are using very effectively today. That's my real fear, that if that goes away, and we also have a situation today where many of the candidates that are running for president are talking about Medicare for all. And you and I were talking before we got together today about what will happen to hospitals in this country if Medicare is the prevailing amount that they're reimbursed for a stay in the hospital. We believe, and I've seen numbers as high as 25% of the hospitals in this country, mostly rural, will have to close if Medicare for all comes into play.
Wow. So let's go back for a second and talk about some of the provisions in the Affordable Care Act. One of them is no pre-existing condition limitations, which is nice because that way you're not being hurt if you do happen to have a pre-ex. And most people do have something wrong with them, whether it's diabetes or cancer or heart disease or something. But the other thing too is with the individual mandate, it says you have to have health insurance. And if you don't have health insurance, you have to pay a penalty.
Correct.
Right? So if I can't afford health insurance, but now I have to pay a penalty, and then if we go back to removing that, then it would really become one of the first things we learn in Insurance School 101 is adverse selection.
Right.
So now all the sick people are going to go on health care, all the healthy people are just going to take the chance, and then that's going to drive up health care costs.
And we're already seeing that. I mean, not everybody in this country, we still have millions of people that are not covered. And adverse selection is real. It is something that the insurance companies have fought for many, many years to try and figure out ways to get the healthiest group under their insurance because it would make it more profitable. You and I remember the days when we would have to fill out a health history for each person in order to get them insurance coverage, and people were turned down, and they went without coverage. What that meant was that you and I and every other employer out there was paying for that because hospitals could not turn them away. So they would go into the hospital with no coverage, they had to be treated, and you and I and everybody else that was insured would pick up that expense.
So wouldn't, say, a Medicare for all actually reduce adverse selection?
It should, but it's going to create another problem. Again, because Medicare pays significantly less than what the commercial insurance companies reimburse for the same exact services. I mean, it could be as much as 100% difference. If you're taking that out of the mix, where are those hospitals? Those hospitals are going to have to considerably cut back or close in order to be able to remain viable. So
is it that traditional healthcare carriers are overpaying, or Medicare's not paying enough, and is there somewhere in the middle?
The answer is both. Without the commercial market overpaying, Medicare could not exist. And it's a blend of the two of them that has worked very well over the years, and I would like to see some form of that to continue, regardless of what happens in the election in 2020.
But nobody really has. Is there really a solution out there that you heard that was better than something else that we've seen today?
Not that I've heard, no. No.
Wow, as smart as we are, we can put somebody on the moon 50 years ago, but we can't figure out our healthcare system.
Very true.
That's pretty interesting. One of the other things that you wanted to talk about was corporate citizenship. What is corporate citizenship today?
Well, I'm very blessed to work for a company that is a real leader in the industry. We for example, just turned 90 years old. We're a family-run business, very large one. We have 32,000 employees across the country. For our 90th anniversary, our chairman challenged us to donate 90,000 hours in our communities that we serve. And we blew through that. I think we ended up with 120,000 hours. And they gave us the time to give back to those things that were important to us. And you mentioned a couple of the things that I'm involved in with the United Way, for example, with the March of Dimes. And this year, I probably have had the opportunity to donate hundreds of hours of company time to do good and give back to those kinds of firms and companies and organizations that really are making a difference in our communities. And that's what corporate citizenship, in my estimation, means, allowing and encouraging your employees to give back. As an example, yesterday we had a program, we had over 100 people show up bringing gifts for the holidays for an amazing charity called Cradles to Crayons. And they deal with children specifically up to the age of about 12 or 13 and from infancy. And we had probably a 12 by 12 foot room completely filled to the ceiling with diapers, wipes, toys, books, those kinds of things. And we're very lucky in our region to have companies like Independence Blue Cross and other large companies like Comcast that significantly make both economic gifts to the community to help make it a better place to live and raise our families, as well as encourage their employees to give back.
And employees like to give back, so in a way that could be an employee benefit, right? And the employer can say, hey, I know you work for me 40 hours a week, 2,100 hours a year, but I'm going to make available to you X number of hours for you as an individual to give back to the community. So the employer's giving back, and it makes the employees feel good about what they're doing too, not just going to work, but my employer's paying me to help others.
Absolutely, absolutely.
Pretty interesting. So corporate citizenship should be a new employee benefit, right? Pretty interesting. What are your thoughts on, we're talking about how to reduce the cost of health care, and I know, trying to go to my doctor, I love my doctor, he's a great guy. But it may take me a couple of days to get in there. If I go in there, I may have a $50, $60, $70 copay. I may have to go back there for the same thing twice, another copay, things like. What do you think about telemedicine?
Well, telemedicine is a tool that works very, very effectively. It would resolve the issues that you're just talking about, having to delay. We are putting telemedicine in almost all of the plans that we write today, and people love it. If you have young children and they have croup in the middle of the night, you don't want to run out to an urgent care or to the hospital. That's going to be extremely expensive for you. But telemedicine is the ability to pick up the phone, get onto a laptop or an iPad, and actually talk to a physician, a board-certified doc, who can prescribe prescriptions for you and take care of many of the things that we used to have to run to the emergency room for that would cost several $1,000 that might, in this instance, cost $100 and really only $20 to $40 to the employee.
Or I have to take my sick child, put him in the car, in the cold, take him to the doctor, get other people sick, and then it's just a snowball effect from there.
But it's a very effective tool that we're seeing today, Rob.
I've used it a couple times when I was on traveling for business, and I used it, and it was real easy. I was able to call up, they were able to diagnose me, and send a prescription to the local pharmacy, and I was able to pick it up and then go back to my business meetings.
Absolutely.
What do you see are up and coming trends that employers are asking for relative to employee benefits? What are some of the new ones you're seeing?
Probably the one that is getting the most attention today is helping your employees to pay off their student loans. That's a program that, again, we've been putting in place. Our voluntary practice does that quite successfully. That's at the top of the list. Telemedicine is one that people are asking for if they don't already have that in place. Financial planning advice is another one that is significantly getting more attention from employers today. Anything that will help the employee feel more engaged and more a part of the company is something that employers are putting in today.
Pretty good. So we're running out of time. I did have one final question before you can provide your contact information.
Sure.
If you were to pick one or two of the top challenges for employers that you're seeing today for 2020, what would they be, real quick?
I think pharmacy is probably the number one that keeps me up late at night with all those drugs in the pipeline, and the increases are double what they are for medical. That's one area that, and I'm concerned from a political standpoint what's going to happen after the next election with the Affordable Care Act, what type of plans are going to be available to our citizenry, and what are we going to be able to offer to our employers.
Thank you, Ed. We do have a political show on RVN TV, so we'll have you on there to talk about that end of it. But Ed, if anybody from the audience has any questions they want to get a hold of you, can you provide them with your contact information?
Certainly. It is just ed_OMALLEY @ajg.com.
Awesome. Well, Ed, thank you very much. It's been a pleasure being a friend of yours for all these years. Thank you for what you're doing in the community. Today we have with us Ed O'Malley, who is the practice leader for Gallagher Benefits, talking about challenges that employers are facing today in the healthcare space. Thank you for joining us this week on RVN TV. You have a great weekend. Happy holidays. And just remember, when you have the opportunity, please pay it forward. See you next week.